number 2, discuss, go ahead and do roll call, please.
Chris Gantier, Shirley Shropshire,
Yes.
Tyler Brown, Charles Trammell.
Here.
Okay, discuss possibly approve the minutes of April 29th, 2025. We're not going to be able to do that today because of the panel, so let's just call that a no action. Okay, presentation from Jennifer Britton and with Brown & Brown regarding an insurance update with possible discussion to follow. Jennifer?
So, if you'll bear with me, before we start looking at the packet that you guys were released, I want to give just a brief claim overview so you kind of know where this plan is, how it's been running, because I think that also is establishing a new trend to the future, which is looking positive right now compared to the last couple of years.
Good.
So if you just give me a couple minutes to talk about that. So there's been a 9% decrease in enrollment, which you're probably aware of because the city has fewer employees now than it did a year ago. And that also equates to a 3% increase in wage. So those are both negatives that can cause costs to go up, fewer people on the plan, less premium being paid to offset some of those high cost claims makes sometimes a negative impact on the overall financial performance of the plan. And of course, as all of us get older, me included, there's a higher risk that we're going to have those high cost claims, so that's why we watch the age. So the average age of the population that's enrolled is really young. Actually, it's 30. And that's significantly lower than it was 5 or 6 years ago when it was up in the mid-40s. So good news all around, except for, that dip in enrollment, which isn't a huge decrease, but it's definitely something to watch, and I think we're slowly creeping back up a little bit, hopefully over the next year, where we'll get back to full population count. The loss ratio for the last 12 months combined now is at 91%. Keep in mind, ideal would be closer to 75%. That everybody's happy, the insurance company makes plenty of money, there's enough funds there to pay for the claims, etc. So it's a little bit high at 91%. But that even has dropped in the last 30 days. It was over 100% the last time I reported to the mayor and the city clerk, probably 45 days ago. So again, trending down. Right now, we have an out-of-pocket percentage for the employees. So what me as an average member on the plan, whether I'm an employee or a spouse or a child, if you look at all the claims that were paid out, and then you look at the people on the plans, costs out of their pocket for those claims, their average is 15% of the overall cost. So it's an 85% value, essentially, that I'm getting paid all of my claims. So I like to always bring that up to employers because you may hear from employees, our insurance stinks, I had to pay, $500 towards my deductible, or I had to pay $100 for my prescription. And those are big numbers, and none of us like to pay anything. But when you look at the overall picture, the value of the plan is still one of the richest that's offered in the marketplace. Blue Cross doesn't offer a plan that's better than this right now. Like, that's as low as you can go as far as deductibles and out of pocket. And so it is a really, really valuable plan that tends to attract people who have health conditions. That's just the way it works. A really, really good plan with a high employer contribution where I'm paying very little for it. If I have a choice to work here for the city at, $15 an hour, or at another employer for $17 an hour where I have to pay for my health insurance and the deductible is higher and all of that, I may choose to come to the city. So again, not bad things, but I just want you to be aware of some of the reasons that the plan runs the way that it does, and so that you're prepared in case an employee or a member of the community says, well, why is this that, or why is it working that way? You're prepared to be able to hopefully kind of answer some of those questions. And you also just recognize that it is a big investment into the employees and their overall compensation package, which I know you guys know that too, but that's a really big part of what their compensation at the end of the day ends up being, including all their retirement and everything else that you're paying for or contributing to. Some other good news is that prescriptions on the plan overall have gone down 27%. So a couple of really high cost medications have fallen off of the plan this year. And that, when you have a high cost medication on the plan, that's a given. As long as that person's on the plan, usually they're going to continue to take that for their life. Because these are life-altering, life-saving drugs a lot of times. And so if we see, a $100,000 medication on the plan, you can pretty much budget that for the next year. That's gonna come out of your expenses. So in this case, we're looking at a 27% reduction over the last year at this time. And then those specialty medications are a 31% reduction in spend. So all really good news. So it's setting us up, hopefully, if we continue on this trend, which, you know, you never know when somebody's gonna get sick or have cancer, but if that trend continues, next year's renewal hopefully will be even better than this year. So we keep the mayor and the city clerk up to date on that at least once a quarter. If it looks like we're seeing some really significant changes one way or the up or down, especially on the upside, we'll touch in with them monthly just so that they know. Then they can relay that information on to you guys, or we can do more of these meetings quarterly if you want to, just for a touch point, okay? Just so that you're kind of prepared throughout the year as you're heading towards budget, even for 2026 budget, you kind of know in the back of your mind what you need to have earmarked for the health insurance side. Okay, any questions about any of that? Just a real quick touch base, kind of on where we are. It's better than where we have been, let's say that. All right, so if you want to look at the packet that we sent out, this is a simplified version, believe it or not, of the initial. So we did meet with the HR and benefits team and the mayor and the city clerk. All of that is noted here on page 1, the marketing summary. We just took out some of those detail slides to make it simpler for you to review. So just starting with the highlighted yellow section there under medical, the Blue Cross Blue Shield renewal initially came out a few weeks ago with a 15% increase on overall premium. That was before any package discounts were applied. However, we went back to Blue Cross Blue Shield and we said, you know, there are some really positive numbers here. That one really high cost medication has come off of the plan now. We're seeing good trends. We've also shopped the market. I've explained to them the city's budget challenges for the last 2 years. And so they came back with a final negotiated renewal at an 8% increase. And then on top of that, once we apply the 2% package discount for having medical, dental, life, and disability all with Blue Cross Blue Shield, it's kind of like your home and auto, right? The more you bundle, in essence, the more package discounts you get. That brings us overall to an annual spend of a 5% increase. So keep in mind, annual trend right now is between 7 and 9. So like inflation on the national average and in the state of Oklahoma too. So just sitting right under that. Unfortunately, we didn't have any competition with the market to help me leverage that down even lower. Community care, which tends to oftentimes be very competitive, it is an HMO, so they can be a little more restricted and it's managed care, right? They actually came in with a 15% increase and the benefits weren't as good. So the out-of-pocket maximum was nearly double on the richest plan, and some of those other copays and things were higher too. So it would have still been an increase to the employees, plus they would have paid more out of their pocket for claims. So that didn't make any sense. And then Aetna gave us a quote with a 31% increase. So obviously we didn't want that. And then United Healthcare and Cigna both declined a quote. They said they could release it, but they would be more up in that range where Aetna was. Doesn't make a lot of sense to waste the paper, right, to even issue the quote. So that's where we are on the medical plan. Any questions so far just about any of that process?
No.
Okay, and then all the others, you can see we did shop all of the other, what we call ancillary lines or non-medical to the market, and we're recommending to stay and keep those where they are. So on page 2, there's an annual fee comparison. We always want to show you an option, even if we don't think it's the most viable option. You'll see in the first section of columns there, the current cost. So total annual spend, this is employer and employee dollars, so this is not total budget for the city, but it's just about $1.15 million. That is all of the medical, dental, vision, life, STD, LTD. And then if you look over to the next section for the renewal, and the reason, by the way, the reason I have 0 discounts in there is for Blue Cross on the bottom line in red, that's included already in the premium paid out. So that's already in there, so it's not line item separated. So then with Blue Cross, the renewal, now that it's been negotiated down, that's a $20,000, almost $21,000 savings by keeping the package. We leave VSP with the vision benefit just because of network. Blue Cross's vision network isn't very good. It would be too disruptive for employees. So that brings us down, again, overall annual spend, a 5% increase. So the way the city's contribution is right now is what we call a defined contribution. So it's a set amount that employees have to spend for their benefits. So this doesn't impact the city's budget unless you change that defined contribution. So it's a little bit of a separate conversation. So in order for the city to save money and reduce cost on the budget for benefits, you'd have to change that defined contribution. So essentially what I'm saying is this 5% is being passed off to employees. That's mostly their expense. And then the option that we showed there, keeping Blue Cross, obviously, like we said, is the best option for the medical plan. We did look at other ancillary carriers. MetLife overall, if you add up all of their benefits, there were some savings there, but the Blue Cross final negotiated renewal that got us down to the 5%, assumed that you would be keeping all of the Blue Cross packages, right? So they're still making some profit off of that to help offset any medical losses. Yeah.
Where we're at now.
Yeah. So that would be our recommendation, is to keep Blue Cross. We have shown another option for the plan design, so the actual co-based deductibles and all of that on the plan. Page 3 shows current compared to what the renewal is going to look like effective July 1st. So Blue Cross Blue Shield, these plans that are in place right now, the benefits themselves are changing as well. So there's a little increase on cost, but there's also a little increase to some of the co-pays and things. We've highlighted those in the orange to make them easy to spot. On the more expensive plan that employees pay more to buy up into, the out-of-pocket maximum right now is $1,250 per person on the plan. That's going up to $1,500. So in essence, it's $250 more out of my pocket for my claims for the entire calendar year on this new version of the plan that starts July 1st. So not a significant increase. We have seen this with Blue Cross across all market segments, small, medium, and large. They're increasing some of that again to balance out some of those trend increases in inflationary costs. Co-pays are going up just a little bit, $5 to $10 for doctor's visits. And then you'll see on the more expensive plan as well, the higher copay tiers for prescriptions are going up. So from $35 to $50 and from $75 to $100. One thing I appreciate, the city allows us to come in and do a full education meeting with all employees who want to show up. We meet here at various different times so they can be here. That's the opportunity that I have to come in and explain to people what changes are happening on their benefits and why. I think we all want to know why, not just that it's being shoved down our throat, right? And then also to offer our services at Brown & Brown that if they are taking one of those medications that's going from $75 to $100, we can help them research what other options there are that treat that condition, maybe for a lower cost. And they just need to talk to their doctor to see if that's a feasible change. But at least we can help handhold that process so they know what list of drugs they can take back to their physician. So small changes here and there, but overall not too significant from what we've seen. I mean, I think everybody kind of expects a little increase anymore on their health insurance.
Well, and I think it's important, sorry, I don't want to interrupt,
Yeah.
I don't want to
No,
like
please do,
sidebar
give
too
me a
much, but
break.
I want the committee to know, one of the things that we've talked with everybody you're going to talk to today is in the past, the participation has been minimal, but also the requirement to come to these educational things has been like, hey, we're having an insurance meeting on Tuesday, and like last year, 4 people showed up or something. It was pretty bad. On our retirement programs, I know that's not what we're doing right now, but we don't get the participation. So this year, we're going to make it mandatory to show up. Being that we are now, you said 31 was our average age, right?
Yeah.
For our employment.
Yeah.
We should, as we talk about how we can help our employees, helping them invest in themselves now, whether it's through health insurance or through retirement, a fully vested employees at 9% retirement. Why are we at 30% participation? We should be at least 45. And so our goal has been to see a % of increase in the participation in these plans. So in that, we're going to make it so that every employee has to come to these. It's not optional anymore.
Good idea.
And if you want to opt out, you opt out and you zone out. I don't care. But the idea is we're going to make sure that, like she talked about, some of these other employees that may need to know some of the packages or options for more seasoned employees that are out there that not only will save them money, but will save the city money. We kind of have an obligation to tell them, because those are some situations that are costing us money in turn, raising the prices for everybody else. So we need to do our due diligence. I hate saying it like that, but making sure that every employee is aware of what we're offering, like she said, is really the best thing that they're gonna get.
They
And
need to be
so-
informed.
So we've taken that option of optional out, and now those meetings are gonna be required.
We talked about the wellness benefits that
Yeah.
are provided through the policy with Blue Cross, how that interrelates with the rec center and some of those things as well.
So what percentage of the employees are in this higher plan?
Right now, there are, let me do some quick math, 27, 29, 36. So it's
Okay.
almost about a 50-50 split, just eyeballing it.
Okay,
Yep.
okay, that's good.
And usually, what we see is, again, the people who have the higher health conditions buy the more expensive plan. Oftentimes, people who don't, or maybe they have family members they're adding, will buy the less expensive plan. And that in itself, just to be honest, that adverse selection between the two plans does have a negative impact. So if you offered one plan, like the richest plan or the lower plan, either one, that helps, because what happens is, if I have cancer or I take a high cost medication, I'm gonna buy that more expensive plan, and let's say I have my husband and 3 kids on the plan. I'm paying into it out of my paycheck to some extent, right? But if I'm healthy and I don't have any claims, I'm down here on this lower plan, I'm paying less into the pool, right?
Right.
And so you have less money coming into the pool, but those claims are still there. So we oftentimes will recommend that employers only have one plan. There was only one plan in place years ago, but it just became cost prohibitive for employees and their families. So the decision was made to the benefit of the employees to offer that lower one. So, you know, again, on a population this size, now if we had 500 employees or more, it might be a more significant impact to go from 2 to 1. If you were self-funded and paying your own claims, it would be different too. So it's not a huge negative, or we'd be pushing that conversation harder, but it can over time have a little bit of imbalance. Yeah. You've got good participation on the base plan, so at least there's that. It's not like you just have a few people down there. We also wanted to bring back to the conversation the Insure Oklahoma program. Years ago, the city had quite a few people who were qualified for this. I call it a coupon. It's a state subsidy through tobacco tax funds. It's been around for, goodness, as long as I've been in the industry, probably over 25 years now. It's a tried and true program, and what it does is it will deposit funds back into the employer's bank account to pay this Blue Cross bill for any qualified employees. Employees get qualified by applying online, and there is a grid here in your brochure that has the requirements. So you have to be between the ages of 19 and 64. Household size and household income is the main requirement that we always look to. So for example, single mom with 2 children working for the city can make just under $61,000 a year. Your average salary, I pulled it, and it was, I wrote it down here somewhere. It was more in the range of like 38 or 40, 45 to 75 is the average salary, if I take off some of those high tenured elected officials. So the masses, right, the larger population, lots of people that are down in that $30-something thousand range. So depending on how many people are working, living in the household, between those age guidelines is how we would be able to tell if they would be qualified for this program. So the state pays 60% or more of the premium. The city would only pay 25% of the cost for the employee. If my spouse as an employee qualifies for the program, the state pays 85% or more of my cost for my spouse, and I pay 15%, which for you guys, because of your contribution, probably the employee would pay 0 for their spouse at that point, because the state would be paying so much to offset it. It's an amazing program. The other thing that qualified employees and their families get is a $900 reimbursement from the state for out-of-pocket expenses. So deductibles and co-pays, all of that, they can file that back with the state and get cash back essentially from the state for up to $900 a year to offset that out-of-pocket expense. So there's no cost to participate in this program. We do need to reactivate the account with the city. It's gone. They've deactivated it. And so we can do that. It may take about 30 days, but we can do that with Hannah and her team. And then each individual, as they apply, it will tell them immediately, and we can go look and see if they are qualified or not to offset their contributions from their paycheck. add that back into the budget. It's just money back from the state to help you offer these benefits. Any questions about that one?
That's pretty nice.
It's the best thing. We used to have people from all over Brown and Brown, different offices in different states calling us. Before ACA, Obamacare was passed, everybody wanted this because it is such a good solution. It helps smaller businesses. It helps lower income families. So, yeah, it almost sounds too good to be true, but we've been dealing with it for years, and it's pretty standard practice now. So on page 4, if you want to flip one more in your packet, I did bring to the table a couple of Blue Cross Blue Shield options that have a reduction in overall spend. So you could see if we need a flat as we can get renewal, this ended up being 1% savings, plus you add the 2% discount, so it would be a -3 overall. What would it take to get to that point? So essentially we could keep what we call the base plan now. We could have a $1,350 deductible with a $3,000 out of pocket. That would still qualify us for Insure Oklahoma. Still have copays and things for our medications and doctor's visits. And then the new base plan, if you wanted to add a second one, would have a $2,100 deductible and a $5,250 out of pocket. So that's significantly higher than what employees would have now for potential expense for their claims. But I felt like you needed to see what the benefits would look like if we were just looking at cost and price point.
But you're recommending the previous one, right? The 5%?
I mean, unless you just feel like employees are gonna really push back about the 5% increase. This is a big change in benefit, especially that base plan.
Yeah.
I think you'd hear a lot of noise
I
about
think
it.
looking at those deductibles and that out of pocket, realistically, that's not affordable for
No.
not just our employees, anybody.
So you're talking $5,000.
I get that it would save in the long run, but that's not reasonable to push onto our employees, not even askable, so.
Not at 38,000. You take your max deductible, you said was 5,000?
Yeah, out of pocket max, yes,
So
5,250.
that's,
Well, I think again, that's where I think we look at, the Insure Oklahoma program that'll qualify. When we had our meeting, I said, I can think of 3 or 4 right off the top of my head that immediately qualify for this.
sure.
When we get into these other incentives like the wellness programs and things like that, I think we're gonna find that the balance will be there in the long run. So I don't think I could ask somebody to go from, $1,250 to $5,250.
Right.
I mean, you might as well just,
No, we can't do that.
they'll walk away.
I do think your employees are, on average, more, Jimmy might, I think would agree with me, on average, more educated about the value of their benefits here. Like, they care about their benefits. They know this is a big deciding factor for why they're here, because they need them. That's why they've chosen to work here for a lot of reasons. The rest in here, the dental does have a little bit of an increase on page 5. So going from $39.59 to $40.78. So, we're talking just about $1. And a lot of that is employee paid as well through contributions, pre-tax contributions. The vision on page 6 is not changing again this year. It's good. And then the basic life that the employer pays for, this is the $15,000 that every full-time employee gets. There's no change to that. Or the voluntary life that the employee purchases, so that's good as well. Short-term and long-term disability, I'm just kind of flipping these really quickly. Those don't have changes either, so those are employee dollars that won't be impacted. So really the place where employees might see the increase would be potentially if they have family members on the medical plan, just based on your contribution structure, and then, on the dental plan as well. Everything else will stay the same. It's a balance of disruption and employee satisfaction and finance. That we're always trying to strike the happy chord between the two of those. And we did, on the marketing sheet, we did look at a program that can do self-funded and captives for the city's health insurance, and it also was very expensive and not competitive. So trying to look at some of those alternative funding solutions as well, and it just didn't make sense. But we'll keep looking every year. We'll look and see what the market has to offer.
It's amazing you got it down to 5%.
Well, thank you. I'm glad you feel that. I'd really like to, I wish I could just tell everybody that it's less than it was last year. That would make my job much easier, but,
Maybe
yeah,
we'll get to that point.
maybe so. We did a couple of years ago. We had some flat and we had some decreases. So hopefully if this healthy trend continues, there's not a lot you can do about that. Cancer happens, accidents happen. You know, we can do all of the eating of kale and exercising we want to, but things just happen. So in this kind of smaller population, it will impact you. But you're pooled with other employers in this size with Blue Cross, so those large claimants do go off to reinsurance, so they don't hit you quite as hard. So there's some contractual things in place that help protect you from some of those high risks.
We've got a lot of discussion with the department heads about safety and taking care of yourselves and making sure, you know, more so also as we talk about workman's comp stuff, looking at, you know, there's nothing you do when you clock in that's so important that you're gonna get hurt. Now, we realize with some of the departments we have, that's just part of the game, police, fire, things like that. But safety should not be third. It should be first. That, you know, being healthy, taking care of yourselves. But I think the big trick this year is gonna be bringing everybody in and making sure that, and we're gonna break it down into a couple different events, but bringing everybody in and making sure that everybody fully understands there are options that make this better yet. So for those that qualify for the insurance limit, for those that want to take advantage of the wellness benefits, you know, the additional benefits that we offer, you know, in terms of like online help or the airlift discounts,
Yes,
those kind of
the,
things.
Emergency transportation benefit and
Those
the
kind of
employee
things.
assistance plan for mental
Right.
health. We added
Because
those last year.
people don't understand that that's out there, and you pay, well, I think last year was like $45 and you're good to go if you need to be airlifted somewhere.
Yeah.
It's a heck of a lot better than 45,000 or whatever. I don't know. I've never been, never want to be, but making sure that everybody understands these things can be yours and more.
You sound like a salesperson.
It was already on its way out, and I was like, don't say it, don't say it. But I think the trick to the long-term savings on this is educating every employee and not just those that think they want to come through. And so I think in the long run, we will see progressively over the next couple of years a trend towards better numbers.
Will you have an Aflac representative as
Yes.
well?
Dinah Yinkst is the representative and she will be here as well.
And that's great stuff.
Yeah,
It
yeah.
really is.
It can really help when you're in a pinch and have something
Well,
going
I used it and I forgot I even had it. I had broke a leg at work and I forgot I had it, but I had paid for it and everything. And then all of a sudden I thought, I've got Aflac. And it made absolutely no difference what all had been paid. This was totally on top of everything.
Yeah, the money right back to you.
Yeah,
Yep.
straight back to me. I would have never paid enough payments during years to ever made up for what I got paid for. It was amazing. So I could see where they would lose money on a deal like that, but that's the way it went. But anyway, it was real good. What was the agent's name?
Diana Yinkst.
She over around Collinsville or somewhere like that?
Broken Arrow, but she does a lot of business in around here.
She may have been the same one that was out there, kind of a little red-headed lady.
Yeah,
Yeah, she was the one.
Really nice.
She was really good at it, yeah.
yeah.
We had her out at GRDA too.
Not all employers will make that investment and pay people to come in and sit in a meeting. And I mean, it makes our job easier because we can educate them on the spot and it slows down the calls of what, you know, and keeps people from doing something that they can avoid, that then we're trying to fix and clean up, that sometimes you just can't because you just didn't follow the insurance rules, right?
Another thing Aflac will do, if you've got a lot of traveling back and forth, that'll help on that too. because-
Mileage, yeah.
Yeah. Well, even if it's not mileage, the money they pay you on top of what all your medical bills are, then that will take care of your traveling and stuff also. It's a good deal.
So are we gonna reactivate this Insure Oklahoma?
We sure need to.
I would, there's no expense to do it, there's no, and if nobody signs up and qualifies, it's no big deal. You're just making a new application.
I think it's beneficial. I mean, like
It
I
helps
said,
out.
do what?
It's gonna help out.
It's going to help out tremendously.
Quite a bit.
So
I
when
think about-
will we have it reactivated for the employees? And if it's activated in 2 weeks, can they take advantage of it
Yeah,
immediately?
really good question. So if it is that quickly, we have to say the state could take 30 days. So if the state does take 30 days and it isn't ready in time for people to apply during open enrollment, they can apply anytime. And then if they want to change their plan, let's say I don't enroll during open enrollment, or I don't enroll my spouse, I get it qualified in July or August, whenever, that's a qualifying event to come on the plan then, or vice versa, drop coverage. So yeah, they have a lot of flexibility once we do get it up and running for employees to get what they need.
It doesn't
They
have
need
to
it.
happen at open enrollment, it can happen anytime.
Anytime.
Correct.
So what do we
That's
do to get it reactivated? Is it just a phone call, an email?
I think you probably at this point have to start over and do the online app, but it's just, name and address and all that stuff, EIN for
But
the
that's for
employer.
individual.
List of employees, yeah, and then the individual employee will have to go in too, so.
So what is
We'll
this?
reactivate the accounts where we have, and then we'll be able to, then the employees can go on and apply.
So we activate
Has to start fresh.
Our
again.
accounts,
I'm
so-
guessing it
for the
probably
city,
Yes.
and then the employee bounces off that one.
does.
Yeah. because
You're not
then-
activating all the employees'
No,
accounts.
no.
If they have to start from scratch, it's gonna take 30 days.
30 days, yeah, and then employees can go in. We're well versed with that, everybody on a team, we can help employees if they get stuck. It's a pretty simple application online, but we can walk them through it.
That's a good deal.
Any other
Yeah, I say we
questions?
get that started immediately.
Yeah.
I know you don't have anything to do, so.
I just sit around, look pretty.
That's right.
We can find out if it is gonna require a new application or not, so maybe Shelley can call on that today or in the morning, and find out what it's gonna take from your side, if they can just turn it back on, or if we have to start over. It depends on how long it's been dormant, and I think it's been over a year, but.
Yeah, I think so.
At one time, the city was getting back, I don't know, $30,000, $40,000, I'd have to look, it was a lot of money. So, might as well get what you can, even if it helps one employee,
Exactly.
it's worth it,
It's every bit worth it.
yeah. Any other questions for me?
I just appreciate all the work you've done.
Well, thank you, we don't always get that usually, so. you
Well,
guys are always
we've seen
important.
what you've done, and the negotiations you've made to get us down to 5%, that's a bunch.
Okay.
Because we could be, like you said, 7 to 9% is the normal, and we're down to 5, that's a lot of work.
Excellent. Well, we'll keep doing what we can through the management side, just administratively throughout the year to keep it down. So, well, if there are no other questions for me, shall we turn it over to Chris? You gonna say?
Sure. Okay, well, we had a presentation, so next time.
Yeah, we
Yes,
got you.
Good afternoon, and Jennifer, thank you for setting this up. I appreciate it. I apologize for the sort of unorthodox setting, but we'll make it work regardless. What I want to do today is briefly discuss expectations for the workers' comp renewal that's going to come up in August. I know CompSource came out a few weeks ago with their loss control at Shepherd, and Alicia, who's the underwriter on this account with us, and shared positive feedback. They had no issues whatsoever, but wanted to talk about kind of our expectations for the renewal, and similar to what Jennifer was doing, what we can do to negotiate that for the city. Just as a recap, this is a continuation of what we've done over the past several years. I know there's been some changes there at City Hall, but this is again a continuation of what we've been doing the last few years and what we promised the board we would do. So we've got some updates on some claims, some information that'll impact the renewal, and then what we're looking forward to as far as potential options to consider renewal and where this goes to 2026. So do you all have a copy of the PowerPoint by chance? Would that be the easiest reference for that?
No, we don't.
You didn't get it? Oh, I forwarded
Is that something you can send and I can print off real quick, or is that?
forwarded it to you.
Yeah, Hannah has it.
Yeah, I forwarded it, sorry. Let's see if I can find it now.
Get it pulled
If you
up.
can print it, I can run and grab
Okay,
it.
whenever you're ready.
I'll be right back.
I didn't bring my laptop in. Yeah, I think he's.
That's magical.
Not sure if it would help if I shared my screen.
Yeah, we've got your big
Is-
screen up in the room, yes.
So you, okay,
Yes.
so tell you what, let's do this. Let me see if,
Yeah, if you can share, we can see it.
okay, so let me try this for just a second. I didn't even think about that. Let me see. I'm gonna share my screen here. Okay, I'm guessing everybody can see.
Yes,
Okay, here we go. I'm gonna try to move these things around.
perfect.
Yeah, we got it.
Okay, so I wasn't even thinking about that, so sorry for the girls to have to do that extra work. Okay. So when they come back in, we'll just
You
move
can
right
see
along.
that, okay.
Jennifer, while we're waiting, the 5% increase, how much of that will the employee incur? Do you know?
All of it.
Well, it depends on the employee because there are two different classes, the union and non-union. And we don't typically have those numbers, like a lot of times those are just shared at the meetings. But, Hannah can confirm, I think, or maybe Morgan, do you know yet, $1,500 per family, I believe. Oh, yeah, Hannah, save the
It's
date.
good whenever you, attach people's names to the emails that need to do the.
Well, we got it here. So, Charles just asked about the employee or contribution employee share. So is the non-union employee contributions at $1,500 a month? Is that right? Or am I just pulling a
I
number
believe
out of
so,
my head?
yeah.
Okay, I was thinking it was two. Okay, so, if that's the case, for example, if I'm a family on the buy-up plan, going from 482 that I have to pay out of my pocket a month to have my family on the plan, now I would be paying, it looks like about $620 per month to have that same family on the plan. That's before the 2% discounts applied, so maybe
Oh.
just under $600. So it's, for the family, it's a big number.
It's a chunk of change.
Yep. There are 10 people, 2 people on the buy-up plan with family, and there are 8 people on the base plan with family. Now, the base plan, before the discount is applied, that increase is only, well, I say only, like it's nothing, it's a lot of money, it's $175 a month more, so, yeah.
Okay.
And then as you go up into the child and the spouse tiers, it's a little less significant, but, actually, those could, if you have a spouse only or children only on the plan, you could still have your medical paid 100% by the city.
Okay.
Even the highest employee spouse tier on the renewal is still under $1,500 a month.
But Insure Oklahoma will help you with that too, won't it?
It could, yeah, especially if the employee and the spouse are qualified. Yep. It's the family that hurts the most, that's why there are only 10 people with your family.
Good.
Okay.
Good question. Uh-oh.
Give a nice hand.
He just went to sleep.
Oh, goodness. Uh-oh, that's
Great time.
Technology.
I heard something stop it.
Yeah, it stopped working. It's really hot.
Is it really?
Yeah, it's very not effective.
So don't do anything. We need a claim. Just kidding. Bad joke.
But they do have hard copies now, correct?
Tell you what, then let's just do that then, since we can make that work, and if you can just kind of be my microphone for me,
Yes,
we'll do that if that's doable.
okay.
Did you get the PowerPoint to work?
Okay, Chris, I think we're good. I put you by the microphone for the, live meeting,
Okay.
and then if you guys can hear okay.
We'll make it happen. Is this good enough to where we can hear me?
Yes, we can hear.
Okay. So, looking at the hard copies, we're going to go through the renewal update for what to expect for August 1st with CompSource. Okay. What I'll have you do is turn your attention to page 1 or 2, the presentation agenda. We're going to do a quick update on some of the claims that we've had, some that are open and some that we've been able to close. As you all know, we monitor all of the open claims on a month-to-month basis. We continually track those, check on follow-ups, progressions after surgeries, next steps when claims are closed, settlement offers are made, et cetera, to make sure we get these claims closed out as soon as possible. So we've got a couple of those that we're going to discuss briefly. And then as far as renewal expectations, it's all good news. It's nothing bad. Just pretty stable renewal is what we're expecting. So we'll go into the math of that and just kind of what options we'll be looking at. Looking at the claims piece, so we'll go into section 1 here. These updates are the end of March, beginning of April. So it'll say page 4 on the bottom of your handout. It's got the copy of the new experience rating. And
Chris, I think Hannah went to get that one. Excuse me. I think Hannah went to get that handout. She had the other one, the PowerPoint. Or no,
Okay.
you're in the PowerPoint. I'm sorry.
It's all right.
You had
It's all right.
multiple
Technology
attachments to
when it
the email,
works.
right? I just saw her get up and run to go get something, so I'm sure that's what it is. They do have the one that,
This is the claims.
okay, so they have, ComSource claim reports.
Okay.
Starting with page 1 of 33.
Okay, so what that is, those are the full loss runs that you all are looking at. That does not have any redacted information, so I would ask that we just keep that kind of privy for this conversation. I'm just going to use claim numbers, and you'll see those separately that has the full claim, the claimant's name, and the date of injury redacted, just for personal protection. The ones you're looking at, the full stack, that has the name and the date of injury in there. I wouldn't bring that up on the screen just for personal information protection. But that's more for us to determine, okay, if we can figure out who it is, what department they work at, do we have anything that we could do to help those people? If we're seeing an increase in, say, claims with the fire department, is there something we can do to support them? Or at the cemeteries, things like that. So I'm going to just strictly stick to claim numbers. And when you look at those loss reports, you'll see them in the PowerPoint. It's going to reference the last 4 numbers of the claim. Again, I'm not going to disclose anybody's name. That really is irrelevant to what we're doing. So I'll reference some of those shortly. But again, we won't mention any names just to protect the privacy for our employees here.
I'm not sure that
So do we-
will allow you.
You can see it, as long as you don't.
Do we have a copy of the PowerPoint by chance?
So you're definitely allowed to see the protected information.
Oh, okay.
By law, yes.
Okay.
As long as you don't retaliate or do
Sure.
anything nefarious with it, yes. Go ahead, Chris, I'm sorry.
Okay, you're fine. So do we have the PowerPoint presentation by chance?
Oh, here she comes.
Yeah, perfect timing. Good job.
Thank goodness
Thank
for
you.
printers.
That works.
Okay, third time's a charm, Chris.
Okay, no, we're fine. So when you all get those PowerPoints, we'll go the 4th or 5th page It'll say work comp claims in the top left corner, updates and changes. It'll have like a picture on the right and my handwriting in black pen.
Yep.
Like I said, it'll be page 4 or page 5. It says page 4 on mine, but.
Got it.
Okay, so that's going to be the main crux of what we're going to focus on today. The new modifier rating, which changes year to year, and this is what the carriers use on your work comp program to factor into your premium, is a 1.31. So you see it circled on the right-hand side. Last year's rating was a 1.33. So it's come down 2 basis points. For us, what does that mean in premium? That's a savings of about $3,800 compared to last year. This current year's premium was estimated to be about $219,000. That's going to fluctuate because we do monthly reporting of the payrolls. So we pay for payroll that we have during the month. So that number could change. There was just an estimate last year based on payroll projections, and then we'll get a true number at the end of the year. But for the proposal last year, the estimated premium was $219,200. If nothing else changed, no payrolls changed, no rate change, nothing changed except the modifier rating, our renewal would come in somewhere around $215,500. But the payrolls will change a little bit. We won't know what those are yet. And the rates should be coming down. In Oklahoma for 8 years now, we've had rate decreases on average. So not every class code type of employee's rate is going to come down, but on the whole, on the average, rates have come down 8 consecutive years. This year is the same. So 215 is probably a realistic number of where it's going to be, depending on where the payrolls are. Last year, we came in with an estimate, I believe, of 280,000, 260,000, and the renewal came in closer to 220. So we were $40,000 below what we budgeted last year, which was good news, but at least we were ahead of it. For this current year, we've had 7 claims. So this is, as of this month, we've had 7 claims. 5 of them are medical only, which is good. Those are what we want. And then we have 2 lost time claims. So our claims numbers are down. That's very good. Those claims for 24-25, those do not come on until the following year. So it'll be 2026. But we're in a good spot right now with the number of claims. And then during this past year, we mentioned tracking the claims and following up with adjusters and underwriters. We've been able to make sure that 4 claims have been closed since this modifier came out. One of them was back in 21-22 or 22-23, and then we've had 3 claims close that occurred during the 23-24 year. So we're doing good on claims this year as far as number of claims goes. The modifier is down, so our premium relative to that should be coming down in August. And then we're also closing out claims here. So we're doing a lot of stuff on the back end to make sure that we're watching the premiums, keeping those as low as possible, and doing our due diligence with the claims handling. If you go to page 5, so the following page where it says claims closures in the top left-hand corner, these are the 4 claims that we've had closed. So again, we're not going to use individuals' names. We're just going to use the last 4 of the claim number. That way you can see who it is, what department they were from. Just to determine, what can we do to support that department if we're seeing more and more people being injured there. From the 22-23 year, we've since had that claim closed. It was open for $23,000 when this modifier came out. It's since been closed for $8,200. The penalty on the mod for 2026, that's going to come down $11,500, which is going to help us in the long run. So we got that claim finally closed out and settled. And then from 23-24, these are the 3 claims that I mentioned previously. One of the claims was open at $11,000. It has since been settled and closed at $7,500. there was the claim 5825. That claim was open at just under $20,000 in total. It has since been closed just a hair under $14,000. And then there was another claim that was open at $39,000 and it closed for $37,500. That one didn't move a whole lot, but that's okay. It's very important that we make sure that all these claims get closed out in proper time and they don't just sit out there impacting our mod. Because the longer a claim stays open, the higher your modifier rating is and the more premium you pay, right? Because when carriers, it doesn't matter who it is, have an open claim, they always estimate on the high end. As you can see with 3 of these 4 claims, they closed for a significant amount less than what they were open for. And the reason they do that is because the claims could go into litigation, surgery could not go correctly, somebody could have an infection, maybe a surgical operation doesn't heal right. So open claims are always higher than what they finally settle for. It's a protective measure and an actuarial measure for sure. So getting these closed out will certainly help us in 2026. So again, this is something we track every single month for the city and make sure that these are closed out in an appropriate amount of time. The following page, so what would say page 6 on the bottom, there's a few claims that are open right now. Again, not going to mention names. That's not important here. During the 23-24 year, so there's 2 of those that are still open, and then there's one from this current year. The first one, 9452, that has resulted in a surgical procedure. As far as we know, the procedure went well, pending the recovery status and when they'll be released by the doctor. That one could close. We just don't know what the recovery time frame is. Everyone's different. Every surgery is different. Every healing process is different. So there was a surgical procedure that was there. As the claim progresses and as the employee progresses, we'll be able to monitor that one. Claim 8178, that one happened in 23-24 as well. That was a shoulder injury. There was a follow-up with the doctor in April. Everything seems to be going according to plan. We don't see any red flags, at least from CompSource's end, that would raise any suspicions there. So that one's going fine. They are just waiting results on the doctor's visit, a possible MRI to see what the next potential steps are in treatment, and then they will address it as it comes from there. So those 2 are still in the stages of waiting for the doctor's reports. And then the one that has happened this year, it's another shoulder injury. We've had, the employee has gone for an MRI. Those next steps will be dependent on those MRI results. There is a possibility that this could lead to a surgery, though we don't know how invasive or extensive that surgery is. But it appears to be at this moment, a lower valued claim, so it may be a very minimal, maybe a clean out procedure, something of that nature. But pending those MRI results, that claim could potentially go to surgery, or it may just be physical therapy, pain management sort of thing. So again, we'll probably have more of an update. Usually claims like this take a while to change. It takes a couple weeks after a surgery to get a real feel for how your body's responding. So these claims may not change a whole lot in the next month, but if they do, we'll be able to share that with the board and with Mayor Doyle and Hannah when those updates become available. So that's really it for the claims. Again, they're working themselves down. So that's a good position to be in. As far as renewal expectations, so we're going to go into that second section of this. The August 1st renewal with CompSource, usually we try to get this done in early June because I know a lot is going on in July. The schools are finalizing their board meetings. Summer break is coming. A lot of people are trying to go out of town. There's a holiday. So we're going to try, as we've done every year, to get this done in June. CompSource is going to try to get us the renewal as soon as possible. And then that way we can be well ahead of this thing. As I mentioned before, the current year's premium was $219,200. Again, that's just estimating off of our payrolls and the monthly reports from last year, so that number could change a little bit. But if the only thing that changes again is the modifier, which came down 2 basis points, which is a good thing, we would be looking at somewhere around $215,000 for this year's renewal premium. Again, the rate should come down, and we'll also have options on the deductible that we're going to talk about in just a second. But that 215 is probably a good number to estimate around. Again, rates are down for the 8th consecutive year. Mod decrease, that all happens. The option for the deductible, so how that works and what that looks like is it is an optional deductible that you can apply to your policy that is on a per claim basis. So we've had some nonprofits in the area and some other municipality clients that we work with have recently decided to take a deductible. And what that looks like is, and I'm just going to use some examples here because we don't have the firm numbers in front of us yet from CompSource to figure out like what a claims fund would be. But let's just say that a $2,000 per claim deductible gives us a 10% credit, which it very well may be around that. So let's just use that number for this exercise. That'd be $21,000. Again, we're going to use big numbers here. You would get a $21,000 credit on your policy. Now, how this deductible works is that each claim, we would be responsible up to $2,000 of that claim. So one, not only does it lower our premium, but also that $2,000 gets taken out of our modifier. So if we have a $10,000 work comp claim, we pay $2,000. Really, CompSource pays the full $10,000, and then the city will pay CompSource $2,000. You're pretty much reimbursing them. So the full claim gets paid, but when the modifier comes out the following year, that claim only shows up as $8,000, not $10,000. If you have a $1,000 claim, you just pay the $1,000, right? It's up to $2,000. So if it's below that, obviously you would pay that, and it doesn't even go on your record. So it's a longer term strategy. It is year to year. So if we try it this year and it doesn't work, then at the end of the policy, we can get rid of it. And you're not stuck to it permanently. It's a year to year thing. But over the long haul, it'll help lower your modifier rating, which will bring the premium down. And then you can start creating somewhat of a claims fund. We've had some municipal and nonprofit clients get their renewal, and they say, look, we would take the deductible. And for this example, let's say our premium's $215,000 and it saves us 10%. Well, they would pay that premium, the $195,000, but they take that $20,000 and they, in essence, create its own bank account. It's a claims fund. And they say, okay, for these $20,000, we're going to pay our comp deductibles out of that. The nonprofit that we worked with, they had, I think, $60,000 left over in their account, and they're a large client of ours, so their number is pretty big when you're looking at 10%. But they've been able to save money year over year to continue to feed that claims fund, and their modifier rating dropped 56 points this year. That was a 6-figure drop in their premiums. So it can work, but again, it's a long-term thing because it always takes a year or two for those claims to come on the mod. So it takes a year or two for us to see the benefit. Had we carried a deductible last year, so $2,000 per claim, our modifier right now would be a 1.26. That's 5 basis points lower, which over the 3 years of those claims would come out to about $14,000 in additional savings. So over the long term, it's very beneficial. But again, if it doesn't work out or we don't feel comfortable doing it, we can always scrap it the following year, or vice versa. We could decide not to do it this year, and then if we get more comfortable with it, we can try again next year. So CompSource will give us the quote just as is with no deductible, and then they'll give us options for, say, a $2,000 and a $3,000 deductible. and I will go through those numbers in a detailed report and say, okay, here's the pros, here's the cons, here's what it would look like historically, and then we can all decide if it makes sense for the city to do it. There's no right or wrong answer. It's just, do we think it's worth the risk, or are we comfortable where we're at right now? So again, once we get that number from CompSource, we'll be able to determine what our next step is. But for all intents and purposes, I would think for this year, a good number to benefit or to budget for the renewal would be somewhere around $216,000. And then as soon as we get the numbers from CompSource officially, we'll be able to alter that number as needed.
Do you know when we will get the final number?
So we should get it probably the first week of June. Typically, CompSource releases those numbers 60 days before renewal. So for us being on August 1st, that would put us at June 1st. They're trying to get us the numbers before then, which would be, tomorrow or Friday. But we should be getting something very likely the first week of June. And then we'll have all of that together. We can share that with you. It may take me 2 hours to put a review together once we get the numbers from CompSource, but I would expect maybe something Wednesday or Thursday of next week. Give them, obviously the end of the month is Sunday. Monday they'll be tying up a lot of June 1st accounts, finalizing paperwork, getting new certificates and policies out. And then probably Tuesday, Wednesday, they'll start working on their July and August renewals. So we're at the front of the list. We've asked to be expedited. Alicia's done a very good job for that, for us in the past on that. So she's got it on the top of her list to get that released as soon as possible. So as soon as we know, you all will know about 2 hours later if that's going to be any different and what our options are.
Perfect, thanks.
Thank you.
Yeah, you're very welcome. Are there any other questions? I know we went over a lot. Is there anything I can answer for you, or do you want to wait till next week and get some numbers in front of us and talk about it then?
We probably need the numbers, don't you think?
Well, I was
Sure.
asking for the numbers more for budgeting purposes.
Sure.
I know the mayor's going through that now, so that was my main
Sure.
interest in that number.
Absolutely.
But, I mean, it's
All right.
only
Well,
a
as soon as
few
we hear
thousand.
something, I will be sure to share that with the team here at the City Hall, and we'll get it to you. So I appreciate y'all working through the technical difficulties, and if you have any questions, please let Jennifer or I know, okay?
Thank
you very
you.
much.
All right. Thank you all. We'll talk to you soon.
Thank you, Chris.
She's very thorough.
Okay.
Thank you for your patience
Yeah, he
with
does a
all the
good job
technology.
too. He does a good job explaining it.
Yes, she's
Real
very
good.
thorough.
Okay, number 5, discuss possibly recommend council action regarding the approval of the 2025 and 2026 City Group Health Insurance Plan from plans presented. I'll entertain a motion.
Motion.
Second, motion been made and seconded. Discussion.
I just have a question. Are we actually gonna recommend to the council the one with the 5% increase? Okay.
And are we going to have Jennifer back to give this demonstration,
You'll be
this
able to-
presentation? Okay, good.
Is that on
That's a good
Tuesday's
thing.
agenda?
Yes.
Yeah,
Okay.
usually is. Okay, any further discussion? Call for the vote?
Shropshire,
Yes.
Trammell,
Yes.
Okay, discuss possibly recommend council action regarding approval of the 2025-2026 City Workers' Compensation Insurance Plan from plans presented. Entertain a motion?
Motion.
Motion made, second. Discussion,
No.
same thing.
Well, is Chris going to be dialing in Tuesday night as well? Yeah.
It'll depend on, do you want him to do this review again, or wait until he has the renewal? It's really up to you guys.
We may need to wait till he gets the
I would
the
wait.
final.
Until he
I
gets the
think
final
we
number.
get the renewal, it could become a little confusing, a little much for trying to.
Question and conversation when we really don't even know what.
I guess my question is, whenever we do bring this before the full council,
Yes,
can we have him available to answer questions?
Yeah.
Or one of y'all, if y'all are comfortable doing that.
yeah, absolutely.
Perfect, thank you. That's all I got.
Okay, so on the discussion here, we probably don't need to have this on the next council meeting unless those numbers come in.
Right, the workman's comp, yeah.
Right,
It doesn't sound like they're going to.
yeah, that's what I was thinking too.
I think the priority is to get that done, medical.
Med done, okay. Any further discussion? Call for the vote?
Shropshire,
Yes.
Trammell.
Yes,
Okay, I'll take a motion to adjourn.
motion.
Second, motion made and seconded. Any discussion? Call for the vote?
Shropshire,
Yes?
Trammell.
Yes.
All right, that's it, we're done.
Nice.
Thank you so much. That was very interesting. It doesn't look like workers' comp's.
Sorry about the-
I thought it was
I
gonna
do
be.
have a question. Shut that off.
Sorry.